Hey traders, welcome back to another video. Today we'll be talking about the dollar, which is set to potentially try a major level of resistance. We'll be talking about gold, which has sold off recently, and the SPY, or the S&P 500, sitting at support. We'll break it all down using data, charts, price action, and more. Let's jump in. Welcome back everybody to my channel. First of all, I just want to say if you're new here, make sure to hit that thumbs up button and subscribe if you enjoy my content. I know a lot of people watch it without subscribing. It would help out with the YouTube algorithm and I would very much appreciate it. So first of all, let's start out by we'll come back to the dollar index, which like I said, is retesting a key level of resistance soon. But first I want to just get a pulse check across the whole room. Let's take a look at the top setups indicator on the Edge Finder. And what I'm going to do here is I'm actually going to keep all different currency pairs, indices, crypto, and commodities, but then I'm also going to add, or I'm going to remove the neutral readings. So currently what we have is we have bullish readings on gold, the Australian dollar against the Japanese yen, Bitcoin, the DAX, the FTSE, the NASDAQ, the Nikkei, and the Dow. And then on the bearish side, we have dollar ZAR, which I think is very, very interesting. And just a reminder for people who don't know what this indicator is, it's looking at a collection of different key metrics, not just price action, but also real world driving forces in the markets, like the commitment of traders data, retail sentiment, seasonal trends, the overall momentum in the market, economic stats like GDP numbers, PMI numbers, inflation statistics, labor market statistics, and interest rate statistics. The Edge Finder, what its purpose is to take all of that data, similar to how ChatGPT might consider lots of things. We're trying to build our own sort of AI in the trading space that helps us find opportunities. So these are the things that I am going to be more on the bullish camp. I already have a gold trade on. It's not going too well. I also have interest in some of the indices, and I already have a Russell trade, which we discussed on yesterday's video. So back over to the charts, I want to start here by taking a look at the dollar index, and the dollar index is currently sitting at a or near a very big level of resistance, I would point out. So what we can see here is that previously we formed a low, we bounced off that low, we held it, but then we had the big break to the downside. We had the big slip. Well, we're now running back up here, and it does seem like we are now coming in to retest that area where we saw the previous bearish breakout. This level specifically is the 101.5 level. And I think that we probably will see some reaction to price if we do get it to squeeze up just a bit higher. Yes, it is moving with some momentum here, but remember, the overall trend is to the downside. And as long as interest rates continue to fall, overall, I think it actually has a very negative impact on the dollar. But again, to the credit of the dollar bulls, we do see yields popping up a little higher. I believe there was a bond auction that did not go very well. And as you can imagine, if not a lot of people are stepping up to buy bonds, the yield has to increase, the offering on the bond has to increase, and then of course bond prices are going to fall, right? These are inversely correlated. In order for, let's say you have a bond, right? Here's your bond. If nobody wants it, the price goes down and the yield goes up, right? Yield goes up, price of the bond goes down. Well, this has, you might say, well, Nick, I'm a currency trader, or I'm a gold trader, or index trader. What does that have to do with me? Everything, because interest rates are a massive driver to the currency, commodities, and indices world. So we do like to keep an eye on yields on this channel. So anyways, dollars coming up to this, I do expect to see some rejection here. I think overall we still see rates falling, and if that does stay the course in 2024, we would expect a weaker dollar off of the idea that Fed interest rate cuts on the federal funds level are going to come down. But we'll see if that is, in fact, that's kind of the consensus. We'll see if that plays out. Next up, trying to stay transparent. This has not been a great trading week for me. I've taken 2 trades. Well, I have 3 trades open, but I've entered 2. Both of the ones that I entered this week went poorly. Here is GLD, or gold. I am long on gold. I bought the pullback here, and now I begrudgingly had to add this little bearish breakout point where basically we broke that key level of support that I entered my trade on. You can see it initially actually bounced from that area, but now has come down and is currently underneath that zone. So if we don't get a rapid bounce back, I'll be out of this trade for a quick loss. Not the end of the world by any means, but this is going to be my second loss in a row. The other one was earlier this week on oil. We saw oil break out to the downside here after I tried to enter long and stopped out on that one as well. So not a great trading week here for me, but looking forward to the new year, and I'm sure that I can catch some overall bullish setups on gold. I do think that, if we start to see this thing swing and break back the other way, then great, I can look for an opportunity to try and enter again if this trade doesn't somehow survive. So again, stop loss is very close to this previous low, and if we do tag it, then I'll be out of the trade. And that will just have been my first attempt on gold. If you're not familiar with my trading style, I do often take several attempts to try and trade something long or short. My stop losses are pretty tight, and so my risk is small, but it does lead to me having a lower win rate because of it. Next up, we'll take a look at the S&P 500, which is pulling back and currently sitting at support. Am I interested in buying this? Honestly, I think I might be taking a trade on this. We have seasonality on our side. We could take a look at that, for example. We'll go to the month-by-month seasonality of the S&P 500, and what we can see here is that December is historically a pretty good month. January is pretty flat in the last 10 years, but if we were to expand this to a longer time frame than 10 years, it would show you that usually the S&P 500 is pretty strong in the January month. It is called the January effect, where a lot of times big, money moves back into the markets. It, kind of rebalances portfolios, goes into growth, things like that. But anyways, I'm still bullish going into the next month, despite this being a pretty, mixed seasonal trend. I still think that we could get upside on that front. By the way, if you do want access to the data that I'm using on the Edge Finder, I should mention there will be a link down below in the description where you can send us a direct message and ask for a discount or more information about the product. If you'd like to hear pricing details and all of the different features that we have, please shoot us a message on our website using the very first link that's down below in the description, and that should connect you with somebody who can help you more on that subject. So again, S&P 500 pulling back here this morning. I do think that this area could hold and continue to be, a bounce point for what has been a very, very strong, couple of months for the indices. Overall, I still want to be long. I'm still happy to stay long if I can find trades. And so I'll be watching this one close. The only hesitation I have with this is that we're really in a tight range. That whole movement is only 0.24% of a price action range. That is very, very tight. So I don't love that we're not getting very much movement, and I'm very aware that if I do take a trade, I might be sitting in that trade for a few days without it doing anything at all. So gonna probably stay on the sidelines unless I see something that looks really good, but we'll be watching that very closely. I mentioned with gold also, I want to come back to this for a second, that we broke support. My next buy attempt would probably only happen if we start to see a break up and move higher, but currently we're not quite there on that one. Also, I should add one more thing. The gold market coming down is very much likely due to the dollar strengthening. And if the dollar, I think it's important as a trader to ask yourself, where am I wrong and what could happen if I am wrong? What do I do? If the dollar breaks out higher, then I'll probably be on the sidelines for things like gold and oil. I do want to see the dollar remaining weak in order to be long commodities. So I'll be watching that really closely. If we get that breakout, if buyers are really strong and they get a clean push to the high side, then I will be on the sidelines myself with gold, oil, etc. So watching that really, really close. And now a quick look at retail sentiment. We can see where traders are currently positioned. This pulls from several brokerages where we get some nice data to see where retail traders are currently long and short. And what we can see here is that from our data, we have a lot of dollar bulls on the retail trading side. And that makes me a little bit skeptical of the rally that we're seeing on the dollar. You can see 93% of traders are short dollar Swiss. Dollar CAD, 67% of the traders that we polled are are long dollar Swiss, long dollar CAD, which gives us that contrarian bearish signal. On the flip side, we have Euro USD, same kind of story. They're pretty much long the dollar and short the euro. So a lot of dollar bulls on the retail trading crowd. And so that keeps me a little bit more on the bearish dollar side of things until further notice. We can also add it for those of you guys who trade minor currency pairs. We'll just take a look at the minors today. Here are all the different crosses. If you trade something like, for example, CAD yen or euro yen, euro CAD, CAD Swiss, feel free to pause the video and take a look at this retail positioning. Also, just as I mentioned, you can get access to the Edge Finder down below in the description. If you'd like access to this data on your own time, you can look at this stuff anytime you want. If you want to look at gold, oil, indices, etc., we also have that available to you as an Edge Finder user. Again, information is down below in the description. Next up, a very quick look at COT, because I do want to warn you, new data comes out in the next 24 hours. We have COT data coming out. So the latest stuff, actually, it might be a little bit delayed. Let me just go ahead and say this. If you're an Edge Finder user, I'll look into this. I don't know this off the top of my head. In fact, it is likely that we will get delayed data, but let me check on that for you. And I paused the video, but I realized maybe I should just show you where you can check this data yourself. So if you would like to, you can always just click this link if you're an Edge Finder user. It will direct you to where we can see the CFTC's scheduling. And what we can do here is we can go for commitment traders reports are released at 3:30 Eastern. Futures only reports, ... Federal holidays may delay release by 1 or 2 days. So that is likely to be the case. Well, it says we're reporting on 29th. So perhaps next January, each Friday, you can always come back and check this and look at the schedule to make sure if there's a holiday that could be delaying the number. Next, I wanted to jump over to the economic calendar and take a look at the next week. As we enter into the new year, we will start quiet, of course, with New Year's celebrations, which will keep people away from the markets. And then on Wednesday, we start to get some action, PMI numbers coming out, jolts. Then we have, of course, the big days. We have ADP, and then we have, of course, NFP on Friday. By the way, this is a new feature. If you're an Edge Finder user, head over to the economic calendar. I find it to be very useful for highlighting the ones that really matter and keeping them in front of my screen at all times. So Edge Finder, again, will be leveling up in 2024, that is for certain. And just a heads up, this is not a sales pitch. It is very likely that as we add more and more features, our upkeep costs goes up, our team demands go up. The Edge Finder price does also go up with that. So I want to say, if you have not already gotten a copy of the Edge Finder and you're considering it, the sooner the better, because I'm being transparent about pricing. We do have plans to continuously raise price and add more features. And as we add more features, again, the upkeep cost goes up, our cost to the software goes up as well. So if you would like a copy, take advantage, click the link down below in the description, message them for the biggest discount that we can possibly give you today, and we will try and work that out for you. Someone on my staff will help you out. Thank you very much for tuning in to today's video. Have a great rest of your day and have a great weekend. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.